Morning, it's Vijay here. Welcome to yet another episode of pre-market commentary. Last few days, people don't know whether the market is going up or going down. What we can call a dull market in general terms, but I would call it a kangaroo market. The kangaroo market is basically a market which is hopping up and down, but when it hops up, you feel oh it's going to go up, and when it comes back to the ground then you feel, oh my God, that is going to go up. Actually, nothing is happening. It's best depicted in this cartoon. As you can see here, there were a few downtakes followed by a few uptakes, finishing off with some antics. So this is what the market is doing. And so one has to just have patience. In fact, you see, in bull markets, bulls make money. In bear markets, bears make money. In a sideways market or a kangaroo market, nobody makes money. In fact, both bulls and bears lose money because this is a market which will test your patience. Even if you're on a veteran, you want the market to go in the direction you're taken a position. This is the normal trader's psyche. So, extreme patience is required. And if you begin to analyze what kind of profits you make in this sideways market, they'll be minimal. In fact, there'll be losses. So luckily, we have been able to escape with some minor profits. But I know we are in a sideways market, a dull market, but one should never short a dull market, is my belief, because this is how things will pan out. Just look at what the market has been doing. So this is the day, April 7th, when the market fell down, then it went up, and then it consolidated. Again, there was a lot of confusion because of the war like conditions, and then the peace came here, and then the market again took off and went to next level. So what would have happened here is people would have become bearish because market is going nowhere, but all of a sudden on a weekend the ceasefire came, and then the market took off and it went to next level. So again, for the next, let's say, 1 month, 20 days, we have been trading in a narrow range, 5200, 25,200 to 24,500. Say basically between 25,000 and 24,500. So 500 points, people are getting frustrated. People are trying to short sell. People are going to go long. You see here, yesterday was a down day in the morning, but bounced back. Day for yesterday was a full down day. Prior to that was a up day. Then the prior to that was a down day. So you will have these ups and downs, ups and downs. This also you saw here also, ups and downs. Red candle is basically bearish candle. Green candle is the bullish candle. So this requires great amount, and also it's a very good, a teacher. The market will teach you patience because you can't make money every day. So you need to understand what patience is. People who survive sideways market will make good money in either a bull market or a bear market. Markets can go either way, in my opinion, because this is something like a flag and pole pattern. So I feel the market will now go higher. So what are the cues this morning? Nifty snapped a three-session losing streak led by Eternal and Geo Financial Services. Small cap advance for third straight session. IRCON, the railway stocks have come into focus again. Same case with defense stocks. In my opinion, this is only a relief rally in both of these. Only in certain stocks you will make new highs, which Garden Reach I think made an all-time high. But generally in railway stocks, I feel they may not be able to make the cross the all-time high which we saw last year. But there is a lot of excitement for short-term traders. This is the stocks to get into because people are already stuck in railway stocks, so they will try to average, and therefore the prices go up. So small cap index hit a 5-month intraday high. Mid cap index ended in green. Nifty metal was the top sectoral gainer. Hindustan Copper and SAIL were the leaders. We hold Hindustan Copper and we believe copper is the next gold. Nifty IT also did well because they were continuously losing. Nifty Bank closed in the green while Nifty did not do. I mean, Nifty also went to the green finally. Pharma ended a three-session losing streak. The reality was the only sectoral index which closed in the negative. So S&P yesterday was, again, US markets were very volatile. S&P finally closed flat. Nasdaq closed slightly higher, and Dow Jones was down by about 90 points. So the good news after market is US president has spoken to Putin. So there is some hope that on the Iran situation, things will ease off. But there is still a situation where Putin is likely to go heavy, all guns blazing into Ukraine because of the recent escalation by Ukraine. So that is something which one has to also keep in mind. Brent oil is generally steady at 65. Gold is steady at the 3,400. Same thing with silver. Silver is now moved to 34 to 35 range. So I'm expecting a breakout in silver, but I don't know when it will come. I expect around 40 to 45 rupees, 40 to 45 dollars in the next 6 months maybe. And dollar index is weakened. The US 10-year yield weakened because the data there was not that great. And here, FIs and DIs, FIs sold again and DIs bought. But FIs selling is also because of block deals, especially in Indigene. I think the FIs sold is a block deal, and the DIs are continuously buying into the block deals. So 1,500 crores is net institution net positive. So what are the stocks to watch today? Power Grid, because they are acquiring MEL Power Transmission, small acquisition, but nevertheless that may be under focus. HAL is talking with General Electric, so HAL should do well, I feel. REC is planning to raise funds, so that may be under some pressure. It's a non-convertible debenture, so it's not bad, but still. So after a long time, JP Morgan has maintained overweight now. So they are expecting a target of 1568. Currently, it is already 1420, so it's hardly less than 10% that they are expecting in the near future. So they expect the earnings over next 2 years should be better than the last two. And then HSBC is bullish on M&M. Yesterday we traded M&M, it didn't work out. Today planning to trade intraday on M&M. We don't have it in our portfolio, but nevertheless, this is what we think. They're expecting, HSBC thinks that it will do well. Margins will improve, profitability will improve because of the ICE vehicles, and generally the changes in taxation should help M&M. So they are maintaining a buy from 3,051 to 3,470 would mean more than 10%. So something very interesting. So there are about 4 or 5 stocks which will be under focus today, and these are stocks. Some of them we will trade, maybe Reliance and M&M. So finally, what this is the situation. So be prepared for this kind of situation. Somebody saying sell, sell now, and no, no, go, God, no, buy, buy, sell. So this is the trading software. The algo itself will explode because this kind of instant decisions. If you start taking, you will invariably lose money. So I would be very cautious in what I do. It is not a trending market. So I would say whatever you do, be very cautious. Sorry, I'm not a SEBI registered advisor, but nevertheless, what I'm doing is I'm trying to wait and buy, because once I get the confidence that the market is moving out of the range, then you can go in that direction. Right now, it is not telling us. So it is better to keep our position smaller so that the profits may be less, but nevertheless, the loss also will be less. So whatever you do, I hope it is successful. Thank you for joining me.